All righty. Good morning, everybody. Good to be with you this morning. Welcome to the Hurley Investments Trade Findings and Adjustments of February 1st. Getting right into it. Last time was the 25th of January, I think. What was it? Yes, that is correct. 25th. A lot of earnings coming up and have started. Boeing earnings yesterday. Let's see. They once again lost less money than was anticipated, which was a big positive. and that is the sort of good news that brought us from 179 all the way up to 263. All of the bad news headlines recently pushed them down. It's double top here on the 200-day moving average, and once again today falling from that point. We can get into this one later, but we talked a little bit about our circumstances, what's been going on currently. Talked about again for a couple times now how seven stocks were a majority of the market return last year, and let's see some turnover into other stocks, and let's see some love for Disney and Under Armour and Bank of America, and there's so many that need a little bit of love. So we can change that. That's still on our minds, but now we've got earnings. And spell that correctly. I like how they say earnings season is in full swing. Yesterday, we had an FOMC rate decision. Not cutting rates yet, and probably won't until June. This is one that Kevin has been harping on several weeks now. Everybody's expecting a rate cut in March, and the Fed, Powell, especially in his Q&A after the rate decision was published, said that nobody was really thinking about cutting rates in March, and it's just far too soon, let alone in January. Far too soon. They need to see inflation continue to go down before they get started cutting rates, and they need the next few months to really show them some serious decrease in inflation. We want to see inflation continue to decrease. Certainly hasn't necessarily done that to their satisfaction anyway. I think it was all up last month, inflation rates. So I think we talked enough about Boeing, what was going on there, mentioned their earnings. We can kind of take this off Fair put spread, I suggested might be able to make that work if you put that on, but it's kind of just trying to figure out after a positive earnings where it's going to go, but certainly today does not look promising as on the upside. Stuck in a range 200 to 214. I would probably leave Boeing alone at this point. Talked about a covered call on Disney if you can get enough credit. Talked about buying the stocks of Micron and Marathon Oil. Micron topped out at 89, touched to 90. Nice little pullback. Check out the last 3 months. Pretty much every time it's come down to this halfway point, the 50 on the RSI, it's bounced from there. And look where we're at once again. Nice pairing back. Kind of just has bounced between overbought and halfway on the RSI. I think it's a great time to be getting into Micron. In fact, we added some Micron on this little pullback and suggest that you could do the same or start it. Talked about leap bull calls, still any directional trade to the upside is worth looking at. Marathon, let's check out Marathon. Kind of been on an upturn. Fell like everything else did yesterday with the rate decision. But it's holding on today along with everything else. Keeping in mind earnings on February 21st. Getting protective puts on. Upside up to 29.50 most recently. That's another one we can suggest. All right. As far as trades, I did want to kind of toot our own horn here for a second. We had an Apple puts up at 195. Let's go back to Apple. So we got puts on right here. Started to come down a bit. We got puts on at 195. And they've just kind of fallen. But how amazing are we? Pick a top there, write it down. Little pop today, but and I'll say we bought. That we bought puts up at 195 that we cashed in today. Buy to open at $5.05. Sold to close. 195 puts. Oops. 10.75. See it here. Where are we? Here's Apple. Bought it for 505. And then you can see here, sell to close, 1075. Obviously, you can see purchased Apple 185 puts, so we obviously rolled those down. So we have earnings reports after the close today for Apple, Meta, and there was one other one, and I'm drawing a blank. Google, all of our big tech stocks. So that gives us 570 profit. That pays for new puts to protect for earnings. Why would we do this? Well, it's trading down at 186, it was down at 185 earlier. Since it was $10 in the profit, in the money rather, we would be losing all of that if Apple has good earnings, makes sense to book a profit that pays for new puts and allows us to make money if Apple goes up. Otherwise, it could get all the way up to 195, and we wouldn't make anything. We'd be losing our profit and our principal premium in the 195 puts. This puts us in a little better position. We do have a 200 day that's fairly close. A couple times we bounced on the 200 day. Maybe broke it back here in end of October and then recovered 3 days after. So we got a good strong support level there as well. So we will see after the hour, not after this hour, but after the market closes today, what happens with Apple and Meta and Google. Meta, we did a similar thing, but it wasn't as impressive as a profit. We had 405 puts and we rolled them down to 400. So just some little things that kind of help us out. It's always nice to have a little bit of profit in our puts right before earnings that we can roll down and basically pay for our protection. Kind of nice. All right, so enough of tooting our horn. I just wanted to look at one idea, and we have a little bit less positive circumstance right now. And I thought, why not look at something that's moving down we can profit from. Jeez. Thought Peloton that's down 23.5%. Maybe has made its move. I don't know. I don't follow Peloton very well or very closely. And it is kind of this penny stock. It's hitting oversold almost. At least it's something I would be on the lookout for if it can't hold that 425-ish. Okay, sorry, I'm getting connected to other Apple products in our home. I love it when that happens. All right, keep an eye on Peloton, maybe some puts there. Hello, hello. Okay. Goodness gracious. Keton. Oops. Figure it out eventually. 425. Look for breaking 425 level to possibly. Whoops. Geez, I don't know. I mean, it's so low. Such a penny stock. Just something to keep an eye on. What else? I don't even know what this stock is. I'm just looking at today's crappy crap stocks. C.H. Robinson. Oh man, this might be good. Broke the $79. It's been holding that forever. Down at 72. Maybe go down to 70. I see no reason other than it's overbought. But man, look how long it can stay overbought. If you zoom in here, excuse me, oversold. February 1st, 22, all the way to 15th. That's like 2 weeks of. That fell that day 87. Next day it was down to 82. I kind of like that. broke $80 support level can go down to 70 if it breaks that. It goes 65. Next stop is 65. Six weeks you can do. That gets you out of a little bit of volatility, but or at least you're not paying for so much volatility as it's down really big today. 13, almost 14%. Another good one to look at, and let's see, Honeywell. Go back here. Ooh, Honeywell has fell way below their 200-day and is now back up to their break even for the day. I'll probably leave that alone. That's pretty big sign to be able to hold that. But like I don't know much about Honeywell, and they obviously didn't have a good earnings, but I'd probably leave that alone as far as a trade. We got 35 puts on Bank of America. I love that. Guys, is there any question? I'm just kind of just looking at some possibilities and thoughts and ideas, but some of the things you can look at and some of the things we've done. I like earnings season just because we can see a bunch of stuff. This is Align Technology. They do the Invisalign teeth straightening stuff. They're kind of in a breakout. I would look at that one maybe tomorrow. LGN. Invisalign. Let me just read. Shares jumped 16% after the medical device company surpassed expectations for fourth quarter and gave a positive outlook. Line earned 2.42 $2.42 per share, excluding items on 957 million in revenue, exceeding the consensus forecast of 218 per share, 934 million in revenue. Company guided first quarter revenue between 960 and 980 million, range above the 947 million penciled in by analysts. So really big earnings beat. Got bull call tomorrow to confirm they held above the 200 DMA moving average. I like that one too. Kind of leaning more towards these two on the bottom. Peloton makes me nervous that it's already such a penny stock. Those are what I would be looking at. Pretty fun. Not seeing any questions come over, guys. Thank you for joining me, and see you Monday with Kevin, and next Thursday. Have a good weekend as well, and take care. See you next time.